Hi, it's Dawn Isenhower with Adventures in Real Estate Summer Podcast, and our guest today is Amy Miller with Team Miller of PRMG. We're here to talk about loans and lending and how this current market is affecting what
Everything.
people can do. It really is. So Earlier in the year, last year, people had their solid conventional mortgages. They had appraisal gap coverage. Rates were lower. So that climate was completely different, and people kept kind of overlooking the other loan products that were available.
Right.
So we were kind of hearing people deterred from VA, FHA, but now this current climate is kind of
We're back there.
we're back there, and you're having to analyze case by case what loan product is the best. So what are you seeing out there now?
Well, FHA has made a lot of changes to their private mortgage insurance on a monthly basis. They lowered it instead of increasing it, since it's the government, and that's a good thing. So they lowered it. And what I'm seeing a lot of times is if you have a conventional buyer who's putting 5% down versus an FHA buyer who's putting 5% down, FHA honestly is the better route for them to go because the payment is lower. Not only is the monthly mortgage insurance lower, but the interest rate on a government loan is going to come in lower. We're seeing rates, starting to creep up. We're back up, 7% and above, possibly in some areas of loans. So, where FHA, you might be at 7.5% for a conventional, you could be at 7.25% for an FHA. And then you have the lower monthly mortgage insurance on top of that. So, and what people don't understand a lot of times too is FHA and conventional are really not that different. They always think that the appraisal, it's going to hit a lot harder. They're going to want more things fixed. No, there's just a couple of things that are different. If there's 2 or more steps, there needs to be a handrail for FHA. But if there's holes or missing fixtures, that's going to affect whether it's conventional or FHA financing. So there's not a whole lot of difference. There's some things, but not a whole lot of difference in those.
Mm-hmm. And I'm even telling people on properties that are in great shape when they're concerned about the government-backed loans, listen, that's not even a factor here.
Right.
This property is going to go VA. It is going to go FHA. It is going to go USDA. So,
well, you do such a great job with that, anyways.
You
can kind of analyze. I think recently we've had a couple people who have said, "Oh, well, I'm going to need to completely replace this deck." No, if you've just got a couple of bad boards, replace those rotted boards. You don't need to replace the whole deck for it to go FHA.
Right.
If you've got some bad handrails, again, just replace what's needed. You don't have to replace the whole thing.
You don't have to reinvent the wheel.
And that's where I think they get tied up on a lot of times, is thinking, I've got to replace the whole thing. And that's going to be a $10,000 fix. No.
So people might come in thinking they have to be conventional. They have to have cash for appraisal gap coverage, which we're seeing less and less of now with the rates going up. And really, that may not be the way to go. So that's why we need good loan officers to kind of explain that. So in keeping with that, we are still seeing a lot of property, though, that will not pass an FHA, VA, USDA appraisal, nor will it pass a conventional appraisal. So I'm seeing more and more people who are in that boat where they want a good deal, but it's going to be impossible for that to finance. So what are the other options that they have if the property's not in great shape?
Renovation loans. So you have conventional, you also have FHA renovation loans. So those, to me, those are a lot of fun. You know me, I have fun when it comes to construction loans and renovation loans. I love to see a house that looks the way it does in its current, condition, and then improve with that renovation loan. So you can borrow over and above that asking price. The biggest thing with a renovation loan, the number one question, can I do my own work? No. Let's just kind of put that out there. It's got to be a contractor who is insured. If they have employees, they have to have workers' comp. We do have to approve the contractor. So if you're going to have multiple contractors doing multiple things, you're getting bids, we have to approve all of those. So a lot of times it's good just to have one general contractor who can cover the whole thing and then let them have their subs. But it's a great way to get some equity in the house. You're buying a house for $250,000, it needs $100,000 worth of work. It's worth at least $350,000. It might even be worth $400,000, $425,000 by the time it's all done being fixed up to where it should be. So that's a great way. And those loan products, they don't require 20% down. They're as little conventionals as little as 3% down, and FHA is 3.5% down. So, but just keep in mind, for an example, if you've got a $100,000 sales price, you're doing $100,000 in renovation, your down payment percentage is based on the total loan amount. So the purchase price plus the renovation cost.
Right.
So that's the biggest difference there to kind of keep in mind. But I have a lot of fun with them.
Yep, you do. Not afraid of them at all. There are a lot of lenders who are afraid of diving into that. No. And it seems to me like the key is just getting the right contractor who's responsive.
Getting the right contractor who is going to fill out the paperwork right away.
The way it should be filled out.
The way it should be filled out. Yes, we've had that a few times too.
Right.
Yes. But yeah, I mean, there's a packet. So once you know who you're going to use, and I always tell everybody, if you think you're going to find a home that needs work, that's what you want to do, then let's go ahead and start working on the contractor end. If you have 2 or 3 companies you're thinking of, kind of narrow it down to one. And then even before you're under contract, let's go ahead and get that contractor approved. Because then we've sped up the timeline, because it can take 2 to 3 weeks to get that contractor approved, and it can take 2 to 3 weeks for that contractor to get us their paperwork.
That's true.
So we've now lost how much time once we go under contract if we haven't approved a contractor up front.
Right.
And once a contractor's approved, they typically stay approved. They'll always, re-look at them. But the only way that they're going to all of a sudden, if we've approved them now, but then they don't use them for 6 months or 8 months because it takes them that long to find a house, we might just have to do a couple updated things at that point, but they're still approved. Unless they've gone under business or gone out of business.
Yeah, and you keep your fingers crossed that does not happen.
Right.
We found another line of work, sorry. We're not in this anymore.
But the biggest thing with your contractor is they need to have done this type of work before. So if you have a friend who is a plumber who's like, oh, I can do that renovation for you, we have to get references. We have to be able to prove if they're doing a job for $100,000 that they've done this scope of work before. So that plumber isn't going to be able to, gut the entire house.
Right.
So just something to kind of keep in mind, when you're talking to people or friends. That's why it's smart to have that one general contractor, who's going to cover all of the work, and then they can hire out the subs.
And they've already got them all lined up, ready to go. They work together a lot.
Right.
So it's very important to have the property obviously matched up to the type of loan. And that's something that I ask people on the front end. They want to go see property before they're pre-approved. And I tell them, we don't want you pre-approved just for the amount. We have to look at the loan type and see what fits. And if this property needs a reno loan, we need to get you pre-approved for the reno loan before we ever write an offer. So that's really huge. And that at least makes your job better.
Right.
Instead of hitting appraisal issues on down the road. And I tell some people, we can go ahead and try conventional and then flip to a reno loan, but you're going to have a much more delayed process.
Much more delayed,
yeah.
Yes.
Especially if the seller has said no repairs, as is, I'm not doing anything.
Well, and like I said, it can take 2 to 3 weeks to approve the contractor. So if you're already 15 or 20 days into that, then you realize you can't go conventional because the appraisal came back and there's too many work orders. Now you've now taken your timeline. We need another, potentially 45 to 60 days.
And the seller's not going to do that. So it's just better to do that up front and have a professional realtor look at the house and assess it.
Right.
And if they're not sure, then they need to get another pair of eyes.
Exactly.
Because there are some things that, they just may have questions about.
And I have, some agents that I work with who will sometimes snap a picture and say, what do you think about this? I have no problem with that at all.
Yeah. What do you think the underwriter will say?
Right.
And that's just being smart. Yeah.
And that's, you and I have done that how many times over?
Driveway.
Concrete on a basement on the condo unit.
Right.
That was a unique one. Can be done as long as it's sealed.
So we like to be pre-approved. We like to match loan type to the condition of the property. We like to try to avoid anything that might totally tank this transaction anywhere along the process. But there are some things that we don't know about up front that just kind of pop up. So what are some big no-nos? What are you seeing? What have you historically seen? What are the big no-nos that can tank your real estate transaction?
So it depends on the loan product, on what type of documentation is needed. But, for example, and I do my best and I try my best up front to get everything that I think I'm going to need. Every now and then you have that customer who just can't get it into you quick enough and they go under contract. But depending on the loan product, you may need tax returns. So one thing to make sure of is, have I filed my tax returns for the past 2 or 3 years? Again, depending on your loan product, not all loan products require tax returns, but if you're doing any type of down payment assistance program, they are going to require the most recent 3 years worth of tax returns. So if you haven't filed those, you want to get that done right away. And those programs don't require tax returns and tax transcripts. So if you just file your tax returns, so if you just filed today your past 3 years worth of tax returns, we just need some type of documentation from the individual or the company who filed them, confirming that, yes, I have filed them, this is how much you're getting back, or this is how much you owe. So that's one of the biggest things. I've ran into that, honestly, 3 or 4 times in the past couple of months where people haven't filed their tax returns or thought they had and they hadn't, or how that can go. Don't go out. So if you have a credit card that you currently owe $1,000 on, don't go out and rack that credit card up prior to closing to $2,000, $3,000, $4,000. Let's talk about it. Doesn't mean that you can't. But let's just make sure, in case for some reason we have to repull credit, or we did a soft pull on your credit up front and now we're going to do the hard pull. We don't want to have any surprises between those 2 different pulls.
You don't like surprises?
I try not to. Doesn't mean I'm not going to get them.
All right.
But just let's talk about it. Anytime you think you need to make any kind of major purchase. Now, if you're just putting gas or groceries or something, on that, that's fine. But if you need a new car, we need to talk about that. Because I definitely don't want to see you go out and have your credit ran 15 times when maybe we could just get you pre-approved through one lender up front, for your car loan, and then we match the payment. Make sure if you currently have a car payment, is it going to coincide? Is it going to be about the same as what your current is? Is it going to go up? Do you have enough room for it to be able to go up? So, those are your big things. I mean, what is it they always say? Don't go out and buy a boat. A lot of people aren't going to go out and buy a boat, but a lot of people are going to go out and they're going to rack up some more credit card debt.
Mm-hmm.
So, again, we're doing a soft pull on the credit up front, and we don't do the hard inquiry pull until they're under contract. So what somebody does between those 2 different pulls can really affect what they potentially could be qualified for once they're under contract. So, at that time, I always send out a list of, this is everything you shouldn't do. And everything you should do, pretty much everything you should do is call me.
Mm-hmm. Yes, always. Did a video on that recently.
Yes.
Call and
tell me. Let's
any
talk about
financial decisions that affect your bank account, your credit, anything like that. Just
right.
talk to your loan officer.
If you're going to have some crazy deposit into your bank account before closing, let's talk about that, because that could affect the financing. If you think, I have $20,000 sitting in my safe at home and that's what I want to use for my down payment. I can't source where that $20,000 came from. So we can't just go and put that in the bank account. Mm-hmm. So we want to always talk about anytime you're going to make deposits or, make any major purchases, or, you're going to get a new car, anything like that. You're going to take out an unsecured loan, or I have a lot of people who think they can take out an unsecured loan for the down payment. Can't do that either.
Right. So, I had people who went to a cash advance place.
Yes.
Years and years ago.
I had a few of those too. So
that was shocking.
Yes. Well, and then now, not only did they take this money out, but now we have a monthly payment we have to count against them. Mm-hmm. So now we can't use this money, but now I've got to count a monthly payment. So, it kind of becomes a double whammy.
Mm-hmm. Very true.
So
very true.
Yep.
So you should always talk to your loan officer before you do anything.
Don't be afraid.
And the job changes are the ones that you, just out of nowhere. I changed my job. Don't do that, or
let's talk about
that. Right.
So again, call me, call your lender, call your realtor. Have your realtor tell you that you need to talk to your loan officer. Whoever you feel most comfortable talking about that to, talk to them about it right away, because your realtor is going to say, you know what, if you don't feel comfortable telling your loan officer, let me call them on your behalf.
Right.
Let me have that conversation.
Yes, for sure.
But don't be afraid if it's, oh my gosh, I didn't file my tax returns for 2 years ago. I'm just going to try to sweep it under the rug and not tell me.
She always finds out.
Yeah, we find out.
So it's better to know up front.
Right, it is. Don't be afraid. I mean, things happen to all of us.
Right.
So, and there's nothing that shocks me. There's nothing that I'm going to look down upon, nothing you're going to look down upon. Mm-mm. Everybody has had a circumstance, and that's okay. Let's just talk about it up front. Let's see how we can fix it up front, because it's a lot easier to do it up front than it is to do it midway through the transaction, or we're closer to closing and now you've lost your job, or you've quit your job, or, there are ways that we can make that work. If you're going to start a new job prior to closing, there are ways we can make that work. I just need to know up front.
Every time.
And we can figure it out.
Every time.
Yes, that's the number one thing. We can figure it out as long as you tell me up front.
So is there anything are there any thoughts that you want to leave everybody with, especially with this current real estate climate that's going on? Any parting words of wisdom that you have for everybody?
Don't be afraid of the interest rates. I know that rates seem high right now. We got very spoiled with low interest rates. We got spoiled with rates under 4%, under 3%. This is the normal. 7 and 8% is actually an average. If you go back and you look at many, many years, 7, 8% is average. Are we going to potentially see rates come down? We hope. Everything that is out there says, yes, that, in 2024, at some point, whether it's into first quarter, second quarter, we should see kind of a little mini refi boom. So if you like something now, don't be afraid of, oh, I can't buy that because it's a 7% interest rate. It's a 30-year fixed. I'm not a big adjustable rate person. I like somebody who's going to be on a fixed. And right now, the adjustable rates aren't anywhere competitive with the 30-year fixed anyway, so it doesn't make sense. Just don't be afraid of the rates, because one thing to think about is if next year that home price goes up and that rate dropped a percentage, your payment's actually going to be more expensive because the price of that house went up. And that takes more precedence on that payment than a little bit lower interest rate.
That's true.
So you can buy the house at this rate today, you can buy the house at this price today, this rate today, and then when rates drop, we can look at refinancing you.
Yeah, because we've seen that build since 2015.
Right.
Really,
most definitely.
Just watching the prices go up, and the longer people put things off, put their plans off, it's just costing them more and more and more. So yeah.
Well, and with the way rent is these days, I have several people that are, I think a lot of people will say, they're landlords. I had somebody just tell me the other day, their landlord has raised their rent 3 times in the past 6 months.
Wow.
Because they're on a month to month, and they can do that. So now she's like, I want to buy a house. I want to get back into that to where it's fixed.
Yeah.
So
need some relief.
Right, exactly. I wouldn't want
from
the
the
month
unknown.
Right. So
yeah. Well, we're so thrilled to have you today.
Thank you so much.
It's such a treat. Really appreciate the advice and your expertise. Been a loan officer for over 20 years, even though she doesn't look like it.
Oh, thank you.
There's nobody who knows their guidelines better. No one who just gets in there, makes sure the payment fits, just make sure that the loan is a good fit for the client, the customer. So
and the house.
And the house, exactly.
Right.
So if you have questions about this topic or any other, feel free to give me a call or message me. My number is 513-236-1254. Have a good one. Bye.
Bye.